I like to call myself a third generation commodity trader. My grandfather was a commodity trader, as was my father, and they had their own company, and that was originally based down in Indonesia. So I kind of grew up with that. But I also I thought about being an accountant. That's kind of what I really wanted to. That's what I thought I wanted to do, because my father was an accountant as well. And so when I was at Polytechnic in London, the course I did was 2 years in, 1 year out, and 1 year back in again. And in that sandwich, what we call a sandwich course, that 1 year out, I went to work for a commodity company, and I thought I wanted to be an accountant. So I was sitting in there training to be an accountant, and after about a month I kind of figured out I didn't want to be an accountant, and somehow I managed to get myself out of the accountancy up into the middle office and then onto the sugar trading desk. So I made a quick move up into the commodity trading side. The same commodity company, Czarnikow, which is predominantly sugar trading but did other commodities as well, they offered me a role back trading in London, but I wanted to go and work in France, and so they ended up sending me to their French subsidiary, where I worked for a couple of years, trading all sorts of wonderful things: fertilizer, molasses. France was quite interesting. So the company I was working for was predominantly a molasses trading company, and there were only two molasses trading companies. One was France Molasses, which belonged to Tate & Lyle, and the other one was Loire and Hanjaz, which belonged to Czarnikow. So we were selling to farmers, we're buying it in bulk and then selling it on through to the agricultural, foodstuffs and stuff like that. So it's pretty wide ranging. So good airing of French for me. I got fluent fairly quickly. And then after 2 years, I came back to London and spent 4 years with Czarnikow, predominantly trading white sugar. We're buying physical sugar and hedging it in the futures market. So that's where I first really got to grips with using futures to hedge my positions, or sometimes to take outright positions, depending on what was happening with the market. But there was, white sugar was traded. A lot of the shipping of white sugar happened in containers in those days, but we did have bulk shipments as well. And it went all around the world, basically. So it's my first opportunity to have a look at the international markets. In about '86, the commodity markets hit a bit of a slump. And in '82, when I was in France, they asked me to come back to London because they wanted me to help them open up the financial futures at Czarnikow. That would have been '82 when life opened up. And I decided at that point that I'd just spent 2 years getting my French fluent. I wanted to trade sugar, so I decided that I wasn't going to do the financial futures. I was going to stick with sugar. But then by '86, the commodity markets were in a slump. There were too many operators inside the commodity markets. So I sort of applied for a few jobs and ended up at NatWest. So ended up on the financial futures desk at NatWest. So more as obviously a broker rather than a trader, but that was when I made the move across from commodities into financials. Believe it or not, in '86, a lot of the European banks hadn't started trading futures yet. So we were going in, educating the larger banks who had big swaps desks, certainly in Germany, France, how to use futures, how to use them in the market, and so we were getting clients. Literally, we were signing them up, and they didn't have a clearing account anywhere else. So you kind of started there, and that's what gave me the leg up inside NatWest, because they became our largest clients in a fairly short period of time. Gradually, I think by around about 1990, I was running the broking desk at NatWest, and we were growing the international business and building out our capabilities. We had quite a large floor operation, and we were starting to look at what we should be doing in the US. We started to look at opening up, and we eventually bought the Burns Fry Sec Pack operation in the US. and that gave us access to the US market. Whereas beforehand, I think if I remember rightly, we were using Cargills to do all our execution. So that was the evolution from NatWest. And we started to do a lot more business out into Asia as well in the early 90s, and started to look at opening up our Asian capabilities. So, we gradually, between sort of 92 and 96, we became members of the Tokyo market, the Singapore market, the Hong Kong market, the Australian market, so we became much more of an international futures broker. And then in 96, NatWest started to buy up a number of operations, and one of those that they bought was the Greenwich Capital. They bought that off LTCM, Long-Term Capital Markets, and that's really expanded our US capabilities. Greenwich Capital was a very large fixed income player, so we then started to have more exposure to the CME and CBOT, and that was a big development for us in terms of what we were doing over here. And built out our floor team, expanded our floor team, and we became much more active in the US market. It was really interesting because, working for a bank, and a lot of the people I know, who I've met through the FIN, and running futures operations, the thing about futures was nobody knew where to put them. So where does the futures operation report into? So over the years, I've reported into the foreign exchange side, I've reported into the swaps, I've reported into fixed income, I've reported into equities, and it kind of seemed to move around. And even to this day, you see banks moving their futures operation. They're never quite sure how to sort out where the futures operation will be, and it kind of seems to be whatever is the biggest part of the futures operations, whether it's equities or fixed income, they kind of lean towards that, and it goes there, and then 2 years later they move it and shift it somewhere else. So it was quite interesting because that came out, and it wasn't until I'm going to say 2007 or 2008 when actually I came up with a solution which actually meant that everybody kind of left me alone, and that was every product got mirrored into the group they were in. So foreign exchange, anybody who was trading foreign exchange, the revenue got mirrored into the foreign exchange team, equities into equities, fixed income and fixed income, and so that way I managed to extract myself from this ever rotating reporting line to ever differing people. There was a couple of things that happened in 2000. The first was that RBS bought NatWest. That really changed it. So up until that moment in time, I was looking after Asia and Europe, and then post the RBS takeover, I ended up becoming the head of the global futures for RBS. But at the same time, life was closing down its markets. I think that the transition occurred, in 2000 with the euro, and we saw what the big switch. I think at that moment in time, the Bund was 50-50 between Life and Eurex, and then when the Matif, when that went to the euro, that business shifted into Eurex. And so all of a sudden we were looking very much more at an electronic trading platform. Life lost out to that, and then Life was scrabbling to hold on to the euro, or what was the euro mark when we became the euro. And so it was quite interesting being there for that moment in time. And I remember Brian Williamson at Life managed to get everybody together to keep the euro on Life, but it was quite a big development for us. And then, of course, eventually the floor was shut down, and we went to fully electronic trading. So it was around that 2000 era. It was a big and interesting time. We actually managed to move quite a few people from the floor into various parts of the operation within the bank. So we built up our sales desk upstairs, because I think at that moment in time we must have only had 6 or 7 people on the broking desk, and so that went to about 12 or 14 people on the broking desk, and then some of the guys on the floor managed to get roles within the trading teams within NatWest. So But we still lost quite a few people who went off to do other things. That was when the next explosion in futures volumes happened, because once you got the electronic, we started to give electronic trading systems to the traders rather than them having to phone into us. And so that was a period of time when, you suddenly saw, that take up, and I think it was a very interesting time, but also a bit of a sad time to see all those people go.